Welcome back, ladies and gentlemen. You're listening to another edition of DIY Money.
DIY Money.
Logan's in the house.
His house.
What's shaking back in?
What's shaking with you? You've been all over the map.
All over the map.
Tell me about college orientation.
Yeah, I took my son to Auburn, War Eagle, for college orientation. It was an entire, almost 2 full days.
You were texting me, and I was like, holy cow. Basically, your orientation.
Oh, my goodness, 29 years ago now. That is ridiculous how long ago that was. I stepped foot on the University of Kentucky campus for orientation. It might have been 27 minutes.
I know.
They were like, welcome, fill this out, be in class at 9 tomorrow. I was like, whoa, okay, that was orientation. It was amazing, and I went through a range of emotions. Parents out there, you'll get this. Many of you have already done it. The first emotion was, this is dumb. Why are they doing this? This is so overkill. The second emotion was like, oh, okay, I kind of see the thoroughness, the thoughtfulness, but they kind of already have our money. Like, the bills are going to start coming again. And then concluding the last and final day, I was like, this was fantastic. And the rationale was that this university that has one of the highest retention rates in the country, meaning freshman to sophomore and then ultimately graduation, they take great pride in that, but they are very thorough in making sure both parents and students know all that's available on campus, everything.
Right.
You need a suit, they got a spot for that. You need help with your writing paper, they got a spot for that. You need tutoring help, this is where you go. Medical needs, blah, blah, blah. So exceptional. And now we're home. And now we're here for 3 weeks, and then we drop them off, and it's like, oh, au revoir.
Is your wife a wreck?
So I used to say that. I got scolded for that. She is not a wreck. She is going through a range of emotions like a lot of moms.
Yes.
She's very proud and excited for our son to go off. She's going to be certainly sad, as I will. There's going to be a void in the house when the big, boisterous, 18-year-old is no longer there. But yeah, I mean, it's all
part of life.
But what's so great about this, Logan, it's like people, I think, get hung up on past things. I try not to. I'm always looking forward to the next thing. Not like wishing the time away, but it's just a new phase, and it's awesome.
Yep.
It is awesome. And I said to my wife, this comes full circle to DIY Money. We were wrapping this up, and of course, a lot of the day and a half was about finances and billing and meal plans and all this stuff, and people had a ton of questions about loans and this and that. And I looked at my wife and I said, I am so glad that 18 years ago, when, by the way, we didn't have a lot of money to throw at it, but we did the math. We calculated an amount we wanted when he was 18, and we started investing. And we put in maybe 30% of the total current value of the account today, and it will be sufficient to provide for his educational expenses in these undergrad. And it's one less thing we have to worry about. And so for those listening out there, whether you have newborns or they're 12 or whatever, it's never too early, never too late to start saving for their future. And you can get on it right now, for sure.
I love it. It's great.
I also ran a 42 and a 10K, which is a 6:43 per mile, and I'm so jazzed about
you were
that.
A beast. I forgot you haven't been on since
So
that.
for those of you that I know many of you are shaking your head, you don't care, and it is quite of a humble brag, so whatever, but I'm just super excited about it because I'm healthy so far, I'm on pace, I'm tracking, everything is great, I'm jazzed. So
That's
I was
awesome.
pumped up about that. If you're a runner out there, hit me up on Strava, we'll connect.
Love it. Okay, we are doing something completely different today. So housekeeping odds and ends, all episodes, Jewel Financial sponsor. And we're not doing a question today. We are doing a series because of all the craziness that's out there right now. I mean, we have been seeing on the social media when it comes to the Big Beautiful Bill, or the actual name I think is the One Big Beautiful Bill Act, there is a lot of misinformation out there, and it's massive. This is a bill that's over 1,000 pages long, so we wanted to do a quick series, 3 episodes where we're going to break down some of this. But Quint, I want to have you on the first episode and talk about what does something like this do to the markets? Near term, longer term, what does something when you get an 1,100-page bill that is sweeping across all different areas, people are mad about certain areas, happy about others, what does that do to the markets?
Well, I don't want to bunt on this, but I will say it typically depends. It depends on the type of bill it is, depends on what's included in the bill. But in this particular bill, I believe we've got a bit of a buy the rumor, sell the news event. Now, let me explain that. That's an old market term. Some people say buy the sizzle, sell the steak. I think my father used to use that one 50 years ago. But the reality is markets are forward-looking mechanisms. They will always kind of look out into the future and sort of factor in what they think can happen. So it's very similar to when you're getting up and leaving your house. You will look out the window or you will look at your phone and go, it's raining today, or it's going to be rain today. It might be sunny and beautiful, but you know there's clouds coming at 10 a.m. or 12 p.m., and so you bring a raincoat, an umbrella, and you are prepared for what's coming, whether it happens or not. Investors operate in the exact same manner. We are always looking out into the future and going, okay, what is going to happen in the future? How can I plan accordingly? And where can I invest that may, benefit me, clients, other shareholders, etc., for what I think may happen? So a lot of what's been going on in the markets over this last year have been predicated on this bill coming to fruition. And so what do I mean by that? Well, if you think about this previous year, we're cutting this now in July of 2025. We started off the year, despite what many people thought was going to be an incredible bullish run because of the election of what happened in 2016 when he was elected and the markets ran, based off of that election result. It didn't happen that way. And so we came into the year, there was actually quite a bit of turmoil, tariffs, trade, etc. Markets were falling. And then we had the day where, Trump announced all the various tariffs that were going to be across the board, and the market really fell hard on that. And the next couple of days were kind of a bloodbath. And then we got to a point in April where the markets were just, way, way undervalued, pretty much relational where they should be. There was some opportunity there. Okay, markets ebb and flow. It is what it is. But here we are. Fast forward now, markets have been strong ever since that day and that bottom in April. And you have to ask yourself, why? What changed? Well, we don't really have any clarity on tariffs and trade. There's still concern over what, rates we're going to be charging countries like China. We certainly don't have any new interest rate news, meaning interest rates haven't gone down. So what could have possibly changed from that time? Well, a lot of people have been assuming that this bill that spends a tremendous amount of money, and I'll address that in a second, could pass, has a high probability of passing.
And also extends the tax rates that are lower than
Absolutely.
what they were previously.
Lower tax rates, spending money, et cetera. Very favorable to capitalism. And so they kind of assess this, right? It's like, what's the probability of this happening? Well, you have a Republican House and Senate. You have a very strong, opinionated president. And so you have the ability, you have these branches of government in your favor that a bill that is put forth by the Republicans could pass. And so people are betting on that. They're putting their chips on the table and saying, okay, if that happens and tax rates are lower or stay low as they are right now, and then maybe there's some additional tax cuts with higher standard deductions, the government's going to spend more money in a variety of areas, defense, both internal and external to the United States, et cetera. So that's money going into various companies. And so people have been betting on that. So from April through basically this passing of the bill, July 4th, markets have been very, very strong to the point that we've repaired all the damage and now we're positive. So in the very short term, I don't think the market does much at all. In fact, in my opinion, now investors are on to the next thing. We've already got that. It's already been played in. It's already been factored in. So if you open, your newspaper, nobody reads a newspaper. If you open your email or you get on social media, you're like, wow, the bill passed, we should buy stocks. Well, you might be pretty disappointed because that catalyst, I think, has already been played in the market. Now, that being said, there are a lot of things tucked in this bill that are interesting when it comes to specific areas. I won't dive into these areas, but many of them have to do with tax credits to specific businesses, types of businesses, et cetera. And so investors are now looking through this bill and they're trying to get nuanced a little bit and say, wow, this, impacts these companies in a better fashion. So, for example, and this is just an obscure one, but I'll just throw it out there. There's a tax credit for using fuel cell energy. And so any company that has any sort of fuel cell, and this is not don't go out and look up a fuel cell company and buy the stocks. I mean, they've already moved big, but any company that's got sort of a business tied to it, to this sort of tax credit, has gotten a boost, because in theory, or not in theory, in reality, businesses might be prone to implement sort of fuel cell energy solution for their business. Obviously, that means those businesses are going to get more revenue, flows to the bottom line, stock price goes up, etc. It's also generally viewed as bullish for the economy and the stock market, because regardless of your view on this, if you give people tax breaks, they are not necessarily going to squirrel that money in a savings account. They're going to spend that money. They're going to put that money into the economy. They're going to go out. They're going to put money into restaurants and travel and so forth. So ideally, that's a positive for the market and the economy. But again, a lot of it is already sort of factored in. I will say the one challenge that it presents, and this is a question mark, we don't know how this will play out. Many prognosticators are sort of giving their opinions, and they're very strong opinions, is the additional debt through additional spending. These tax cuts, which decrease revenue for the federal government, as well as other expenses that we need, such as, internal, military, border control, et cetera, as well as external, that costs money, which is going to create additional debt, additional deficits, and ultimately interest expense for the United States. What happens with that? We don't know. At the moment, the United States dollar value is decreasing because people are concerned that creates, inflationary pressure, putting more money into the system that we don't necessarily have. It's creating a decrease in the value of the dollar. That's concerning. But the reason I say we don't know is because those spending cuts and those tax cuts and those spendings should spur economic growth. And the bet the Republicans are making, and whether you agree or disagree, the bet the Republicans are making is that the additional growth will offset the additional expense. We don't know whether that will happen or not. So be very careful for you out there that are going, oh my gosh, the dollar's going to zero. I'm going to buy gold or Bitcoin or whatever. Be very careful about that move. Also, be very careful about the move of saying, oh, this is amazingly bullish. I'm going to buy stocks. We're off to the races here. And that's usually, Logan, how everything sort of works with politics, Congress, bills, and the markets. I will tell you, you didn't ask this, but I alluded to it. Investors are now sort of looking ahead. There's always this whack-a-mole game going on. There's always something that is of great concern to investors, and then it sort of subsides. Again, the whack-a-mole goes down, and then something else pops up. Sometimes these things are very well known. We know they're on the horizon. We can deal with them, etc. Sometimes they come out of left field, and they create incredible volatility. COVID, out of left field, incredible volatility, right? Wars, issues that are geopolitical in nature, often out of left field. We have to deal with them, and they can be abrupt, and they create a lot of volatility. Other times, there are things on the horizon we know about. We're watching them very closely, and they become the market driver. And today, at this very moment, I would say there's a front-running race between trade and tariffs and interest rates. And trade and tariffs we've been dealing with for a long time, but we really don't know how that's going to play out. And now, at least, we've dealt with this whack-a-mole so much that anytime we get news about it, the market kind of takes it in stride. It's not as crazy. We got news recently that Trump drafted some letters to some countries saying, here's what you're going to pay. I think if this was 12 weeks ago, markets would have been in turmoil. Oh, my goodness, we have a tremendous new tariff on Japan or whatever it is. This is terrible. Nowadays, it's kind of like we brush it off. We don't know if it's ever really going to come into play. Interest rates, on the other hand, have been stubborn for a long time. The Fed is convinced they're not going to be lowering anytime soon. The market doesn't like that. It's been okay because we have these other things going on. The beautiful bill, right? We have had maybe some resolution, or at least kicking down the road of tariffs and trade. And so interest rates haven't been a big issue, but they're going to be. And they, in my opinion, need to be coming down sooner rather than later. That's just my opinion, but that's what the market's focused on right now. So everything going into interest rates, such as payrolls, numbers, any other inflationary data, tariffs and trade, are watched very carefully because they impact interest rates. So big, beautiful bill, great, awesome, but it's done. It's already been priced in. We're on to the next thing.
Yeah, I like that. And I think it's really important to look back at what Quint was saying at the beginning, is that if you've heard something that's happened that's already done and it's in place, market's probably already moved on that news. So it's like finding out that you have this amazing stock 3 weeks after it's up 50%, right? Like you already have had that move that's happened. So you got to be really careful about what you're reading on social medias, what you're seeing on the news headlines, because a lot of the times it's already done and the market's completely focused on something else.
Well, you have to think of it like a point spread, right? So I mean, I know maybe you're not a gambler, and that's fine. I'm not a gambler, but I want you to understand how it works. So someone in Vegas sets an odd, right? So they say, okay, Dallas Cowboys are playing the New York Giants, and so all of a sudden that bookie in Vegas says Dallas Cowboys -2, meaning they're the 2-point favorite. Now, what happens from that moment on is gamblers or fans look at that and they might go, I cannot believe that. They're playing in New York. The Dallas has lost half their O-line. This is the most ridiculous thing in the world. Giants are going to, so they bet against that, right? They take the other side of that aggressively and quickly. And what happens is the line moves. And maybe by the time the game starts, the Giants are now favored. So people moved the line. And what is always amazing to me is when the game is over, right? And so the game went off and the Giants were -3 and they won by 3 points, right? And what do people say? Oh, Vegas got it right again. Unbelievable. Vegas knew they're the best in the business. It wasn't Vegas. It was the investors leading up to that event. They knew. And that's what happens in the market. The smartest people in the world, maybe not you or I, and certainly not the kid in his mom's bedroom on the Robinhood account, but the smartest people in the world, the institutional managers, the hedge fund managers, they are betting on the news flow that's coming down the pike, and they have unlimited resources to do the research of what they should be betting on. They get an incredible edge, and therefore, by the time it happens, the spread is basically what it ends up being. It's very rare that it ends up being something completely different. And when it is, it throws everybody for a loop.
And
right?
that's why this week after July 4th that we've had, markets are pretty much flat on the week.
And it might be shocking some. I can't believe it. It's the biggest bill in the world. Why is the market not reacting to this? It's already reacted.
I love it. All right, we're going to wrap it up there, friends. Secret to wealth is really very simple. Live on less than you make, invest the rest. Do so for a very long time. Make it a great one.